I do think that it's too hard to ignore the ability to softly default on the dollar by revaluing gold. It is one of our only options left. And for those of us who look past even being able to market, guys like James Rickards, who's saying way much higher, maybe 24,000 based upon a metric he has, or Mike Maloney, who says 10,000. 10,000 would give the Treasury General Account $2.5 trillion free and clear. 24,000 would give $6 trillion free and clear. But I think politicians might argue, if it gets to that point, that the long-term purchasing power of gold justifies a higher valuation. I don't know, but I do think that it's coming.
We'd love to get your insights into what the heck is going on with the Fed, for one, and the markets and the exchanges for another. We seem to keep getting closer and closer to various breaking points. In fact, Rafi Farber also has been talking about the repo fund running dry. And the last time that happened, or the time before last, 2019, there was a September spike up to 10% overnight for the interest rates, and that usually spells trouble ahead. And he says we're running up within a couple weeks of that dry spell again that will clog up the plumbing of the financial, the monetary system that the banks are subject to in our country. So we can tackle these in any order you prefer, and if you have other things that you've been watching, feel free to bring those in as well. But I wanted to see if we could get a quick update from you on your view of the, rapid fire types of news that seem to be coming out about the Fed making throat clearing noises about changing to a new way of dealing with our monetary system, and the Trump administration's approach of changing its relationship with the Fed. And there seems to be a clash of the titans going on right now there, and wonder where the ordinary moms and pops like us are gonna shuffle out in this mix. Your view of what's going on surrounding the Fed?
Yeah, you look at the issuance of all the stable coins. To Rafi's point, the issuance of stable coins would really compete with the Wall Street banks, would really start, in my mind, to challenge the mandate of the Fed, one of the mandates, and in the respect that when stablecoins are being created, not just by banks, but by corporations, the backing will be U.S. treasuries and a one-to-one basis primarily, or real darn close to it, instead of currency being created through lending by the banks. And what this does is it will take reserves out of the Federal Reserve, because these bonds, these treasuries, will be purchased or taken directly from the Fed or the accounts at the Fed, and then deposited into the Treasury General Account. In other words, everything goes through the Fed, and so it will go through the Fed. It will pull reserves out and go into the Treasury General Account. And really, what that does is it gets us probably much faster to that point that we saw in 2019, where you had about $3 trillion in reserves. And when you dip below that, you get into a liquidity problem. You get into that reverse repo problem. You get into the overnight lending spike problem. There are a lot of very interesting things happening at the Federal Reserve. The appointing of Stephen Murin to the spot that it has opened up, the gal that resigned. He's the gentleman who advocates for a weaker dollar, who wants lower interest rates, and is the author of the Mar-a-Lago Accord. So many things happening with the Federal Reserve, not to mention who is going to take the helm who to replace Powell next year, and is it Judy Shelton? Is it Besant? What is their plan? Is it to devalue the dollar? Is it to do something with gold and revalue it? You just saw the Federal Reserve issue a report right off their website. Go to it and look at it, talking about gold revaluation, how it's been proposed by people not only in the United States, but other central banks around the world. What was a fringe theory that I talked with you and others about months ago is now all of a sudden being written about on the Federal Reserve's own website. Certain things that stick out as well. You have Michael Hartnett, who is an analyst at B of A, amazing analyst. You know, Vince Lancy covers him well, and Vince is another smart guy, one of the smartest. But Michael Hartnett is one of these guys you have to read over and over, or have Vince read it for you and kind of translate his lingo. But he just came out the other day and said central banks, in essence, will be forced to revalue their gold reserves because of debt burdens, which is obviously very positive for gold. Michael Hartnett said that. And then you have another one of their analysts, Bank of America, Francisco Blanche, talking about gold revaluation, said, be very bullish for gold, showing it's no longer a barbarous relic, but a key asset for central banks. Now even the biggest central bank of them all is taking a renewed interest in gold. So you have analysts of the B of A talking about this, but this is too hard for the Fed, I think, and the Treasury to ignore in an effort to pay down debt, to fund stimulus or to infrastructure. Maybe not to issue as many bonds for a while because they'd have enough money in the Treasury general account. Or, to your point, support a new currency framework, a new partial gold backing, or to Judy's point, a Treasury-backed, a gold-backed Treasury. And for those of us who say, well, like James Rickards, it's funny because I did an interview today, done again with Alistair and Jesse Day. Jesse asked Alistair and I on, and he doesn't think it'll happen, that gold will be revalued. And I said to him, I really appreciate your insight. I disagree. I say, when I'm on with Dunnigan, I tell him you're the smartest guy in the industry, and he is. But I do disagree. I do think that it's too hard to ignore the ability to softly default on the dollar by revaluing gold. It is one of our only options left. And for those of us who look past even being able to market, guys like James Rickards, who's saying way much higher, maybe 24,000 based upon a metric he has, or Mike Maloney, who says 10,000. 10,000 would give the Treasury general account $2.5 trillion free and clear. 24,000 would give $6 trillion free and clear. But I think politicians might argue, if it gets to that point, that the long-term purchasing power of gold justifies a higher valuation. I don't know, but I do think that it's coming. There's been a lot of talk also about the tariffs. One of the things that I saw last Thursday night, and again, I've never seen before in my going on 36 years in this industry. So I'm out to dinner with some people, one of which is someone who I work with, and he says, do you see futures? They're at $3,500, and I look at my phone, I look at our website, I'm like, that can't be because spot's 3,400. He says, no, they're 3,500. I'm like, can't be. And lo and behold, I looked at the CME website, and yeah, they were at 3,505 or whatever, even higher. I've never seen that to my memory, where on one announcement that the futures price dislocated by $100 an ounce from the current spot price. And certainly putting a 39% tariff on gold bars would have been enough to certainly do that. Now, they have backed away from that to a degree. One thing that people who are covering this story are missing is still the 10% tariff on all gold bars, regardless. In fact, I think I have it on my phone here. I was just reading it. Regardless of, as of April 5th, 2025, an executive order added a 10% additional tariff on all imported gold bars, regardless of country. So that's $1 million worth of gold bars imported would add $100,000 extra on tariffs. Now, it does exclude the bars that have come in under this 39% tariff. Have no duty. Now, they have backed off on that and said the customs had spoken out of turn. So no, they're not going to be tariff 39%. But that 10% tariff alone, if you know that these refineries and this industry works on fractions of a percent, it is ridiculous. And will make very quickly, these banks who are shorting naked think twice about doing this. And so I'd also like to say that even though they've backed off of the 39%, and all of a sudden people are forgetting about this extra 10%, which I guarantee you is part of the reason what we're seeing in Comex, which I'll get to in a moment, I think it really goes to show how quickly things can distort prices and trade flows, with gold's plumbing being as sensitive as it is. Like bang, boom, up $100. Whoa, that I've never seen that before. One of the things that I've noticed a lot about the deliveries into Comex is just how they keep ramping higher. And it's something that is very strange to me because these are things that we would never see. Now, here it is right here. I want to, we talked last week about where I would say on your show that less than 1% of contracts ever stood for delivery. Now, I used to say that way back when we started talking about all the deliveries on Comex. In 2020, I was talking about this with you, and I'd say, look, forever, 1% or less stand for delivery. And I mentioned to you last week how just through the first 3 days, we saw 20,160 contracts post for first day settlement. And of those 20,160, which is 2,160,000 ounces, every single one of them stood for delivery, 100%. Now that's really unusual, like way unusual. And in 3 days, the first 3 days of the delivery notice, $7 billion worth of gold stood for delivery. And most has actually been withdrawn off of Comex. Now I got at the same time, and I want to give credit, I try and always give credit to people like Vince Lancy and Alistair, because this whole community does so much work. And it's hard to do it all on your own, and I rely upon 3, 4, 5 hours a day of reading, and I find so many people, and I try to quote them. This is someone, I don't know who it is, but I noticed that we follow each other now on Twitter. His name is PM, his or her name, PM as in Precious Metals Bug. And PM Bug said, I looked at the totals for Comex daily delivery stock reports for the last few days. You can see that the received and withdrawn numbers are 10 times the net change. Okay, I could show you the table. But what I want you to understand is that August 1st, must have been a Friday, August 4th, 5th, 6th, and 7th. Those are the days that are in this table. And what it shows as is that for silver, okay, for silver, the Comex received 1,721,192.540 ounces in bars into the Comex on those 5 days. 1,721,192.540. But we saw leave the Comex withdrawn over those same 5 days, 1,890,316.820. So more than all of the silver that was deposited in those first 5 days, which in and of itself is crazy, seeing all of these deliveries, all of it plus another 170,000 ounces left the Comex. One of the things that's really unusual, Dunnigan, is this acceleration. It's crazy enough to see the deliveries. It's really crazy to see the number of contracts posted for settlement stand for delivery, when so many of these contracts would roll over or cash settle, not stand for delivery. And when you see in 3 days, $7 billion worth, 220,150 or 60 contracts, all of them stand for delivery, it should start to marinate in your brain that something much, much, much bigger here is happening. And look, so I mean, what you're basically seeing is that not only are players wanting to keep their metal at Comex vaults or bring it here from wherever it's coming from, they're also withdrawing a massive amount. A massive, in fact, in this case, more than was delivered. To me, that is a massive sign of the times, and you have to wonder who's behind all of this. I don't know. I guess that it's interesting that there's zero talk of this on the mainstream business media. Those are the big things to me. We could talk about the acceleration of M2 and what that typically means. One other thing, I guess, that is worth mentioning, I talked with you about how we have record margin debt, we have record by the public, we have record participation in the equity markets by the public, greater than that of the dot-com bubble. At the same time, we have all of the insider selling, like huge, the owners, the business insiders, but also the institutionals, the hedge funds. They've been selling 2 to 4 billion a week since June. And I talked about Bezos selling 6 billion in Amazon since June. Anyways, one other thing to add to that is you also have record option play by the public. So you have, when you talk about what could possibly go wrong, you have record involvement in options by the retail public, record margin debt by the public, over $1 trillion, record all-time, and record participation as the insiders are going the other way. And then you see deliveries, like I'm mentioning, with actually outflows out of the Comex. You're talking so sophisticated, and who the hell and where the hell is it going? Who's taking it, and how do you take semi-trucks worth of metal out of the Comex? Where is it going? But every day this is going on. Every month this is going on with gold and silver. And the public has very little exposure to it. So the public is all in on leverage in equities, as the institutionals and the insiders are going that way. And their institutionals and whoever the hell is sophisticated enough to do this on Comex is taking delivery and deliveries and offloading amounts that I've never seen in 36 years. No one has, while they're, the public has nothing in equity, in commodities. And what could possibly go wrong? I think people need to think about the little man rule, the art of war, misdirection. This is how the big money always wins, and the herd always gets led to slaughter. It's the few that, can do things out on that cold branch with the wind blowing against you and no one supporting you, because you know in your heart that this is not the path to salvation, following the herd. It's a tough thing to do right now, but instead of following the herd, why don't you follow the insiders? You don't have to listen to what everyone is doing. Just look what the insiders are doing, and that should be, I think, a far better indication of where success will be than the herd, who is pushing the narrative at all-time highs and all-time overvaluations historically. I don't know. For me, I'll take the road less traveled, but traveled by people who are closest to the information, at least if it were me.